Good morning, ladies and gentlemen. This is Butch Shorak for Options University. It's Monday, February 6th, 2012, and the bull market keeps right on marching. With that, access to this video is for educational and informational purposes only. Nothing contained in this video, website, or promotional material constitutes a promotion, recommendation, solicitation, or offer of any particular investment, security, or transaction. And it was the week that was. It was earnings this week as Dow, Qualcomm, MasterCard up 6.7% after its earnings announcements. Beat for the 7th straight quarter. Cardinal Health, Seagate Technologies, Broadcom, Whirlpool, Pfizer, Lilly, and Green Mountain all beat expectations and were well rewarded by the market for doing so. ExxonMobil was in line with their expectations, and finally those that disappointed were Amazon, Boston Surgical, and ultimately the last one, CI, is Cigna, which also was short of expectations. So there were a lot of earnings that came out this week, and the earnings overall looked strong as the market looked at its next week of earnings that we have seen. Last week there were some mixed results on our economic announcements. As you can see by the boxes, there were quite a few economic announcements that took place. Big one was on Thursday as jobless claims were down, less unemployment being filed than what was expected. And finally, the big one was on Friday with the employment situation, as we saw that expectations were surpassed on the unemployment numbers, as we saw that expectations were for consensus for 135,000 non-farm payrolls, and boom! Say 243, much better than expected. Expectations for the unemployment level were at 8.5%, and you see that we ended up at 8.3%, again surpassing our expectations for unemployment last week, as we're well below that 9% area. We saw that coming up in the next week, which is important to us as we look forward into the next week, we don't have a whole lot going on. Nothing basically on Monday. Ben Bernanke speaking on Tuesday at 10 o'clock. He has been known to move the market, as he did last week with the Fed meeting. Jobless claims, which take place every Thursday, are at 8:30 on Thursday morning. Wholesale trade may or may not move the market very far. Consumer sentiment has been pretty rosy lately, and that also can move the market. And then we get Bernanke twice next week as he speaks at 12:30 on Friday. So not a lot of announcements next week, but a couple of them that actually may influence how the S&P and how the overall market goes. So with that in mind, let's take a look at our week that was, and take a look at the Dow, the NASDAQ, the S&P, and the Russell 2000. As we see the percentage change for the week, basically Dow was up about 1.6%. It was the laggard of the percentage-wise for all the indexes that were out there. NASDAQ up 3.2%. S&P 500 up 2.2%. And look at the Russell run as we go into this new year. It, for the entire for the beginning of this new year, has been up 12% as the Russell's been running. NASDAQ has moved 11%, and look at the S&P up 6.9% for the year. How long can we keep this up? If it kept up, we'd be up 60% of the year. So we know at some point we'll have some pullbacks, and the market will do what market does. Markets move. They move up, they move down, they move sideways, and it's up for us to take advantage of each and every one of those moves as we plot out and take advantage of these markets as they are. We see that we finally got that breakout on Friday. There it is right there. And we see that that broke up higher, and we have this stair step that's taken place in the market as we moved sideways about 5 days, move sideways 5-6 days, break out again. This one was 11 days where it consolidated within that price range. Notice that the difference from there to there is about the same as from there to there. So we've got an equal distance there. And so we can expect that we probably will get another equal distance as we'll work our way up higher in this market. All right, so let's take a look at some of what we saw. In a closer, magnified view, we see that Friday we had our breakout. And we broke out on that wonderful news of 8.3%. We do have a gap that's sitting there. And these gaps tend to get filled, so we'll see when it gets filled. We saw that the Fed meeting caused the market to move up. This is where it took place, right there, where those highs are, right there. And we see then it did do some consolidation as the market went on. And then we saw that Friday with those unemployment numbers, up we popped. And those 8.3% numbers absolutely caused the market to pop up. How high will it go? Well, we'll go through that for those of you that are gold members as to what our expectations are. The VIX at a low for the last few months as we sit there at 17.10, and we see that we're in that more normal, historical normal range for the VIX, as a lot of the fear and volatility are coming out of the market as we are just working our way on up. So more normally we'll spend our time below 18 or below 20 on the VIX. So we're into more normal areas and more normal movement for the SPX. And for the overall market based upon volatility. Here's a 5-year chart on the SPX. Notice that I've got a trend line drawn right across there. We're going to look at a magnification of that trend line to find out where we are coming out of this basically what looks like some kind of symmetrical triangle as we have been breaking out and headed higher during this bullish run, which has been going on for quite a few weeks now. In fact, with absolutely no pullback whatsoever. So here we are with a magnification of it, and we see that we have this market that is moving sideways. So let's take a look at this, and we see here we are this week. We had quite a week in the market as we confirmed the breakout from the previous week. So SPX breaking out, breaking up higher, and there is room up above us as we can see as we look back at some of the previous highs. So let's go ahead, take a look at the next chart, and we see that we've got room up above us, and we've got some more resistance lines up there as the market closed at 1345, which was one of the targets that we've had set up last week when we looked at this with the with the gold members. So those are the stocks that we're watching, and for those of you that are bronze members, happy to have you aboard. And there will be a website that you can go to if you'd like to see more of these videos and you get in on some of the gold bonuses that the gold members will be seeing. So for the gold members, we'll be back in just a couple of minutes.